Recap from my trade yesterday, which was April 27th. This trade, I lost 1,000 fake or paper trading view US dollars. I took the reason I took this trade was because first of all, we were confirmed bullish on the 4 hour. Here we broke structure with this candle as it closed above these previous highs. Since then, price kind of consolidated, but it didn't break structure to the downside, which I interpreted as a liquidity sweep, and I pretty much thought it was going to go to the moon. So we were also bullish on the 1 hour as well. Thing where we had a confirmed break of structure up here. And although I suppose I could find some small instances of a break of structure to the downside, which I should have been more careful with, this more or less just consolidates um, to the downside, at least until after I took my trade. So it broke structure to the upside, but it was still kind of choppy. So it probably, although it wasn't maybe a red flag, it still probably wasn't the best trade to take. Um, this trade I took with pretty much my standard trade. I found a liquidity sweep here, and then price goes up, and then it retraces back into an order block within equilibrium. I believe I took it on either the 5 minute or the 1 minute. So the order block price sort of liquidates here, stagnates a bit, and then it shoots up to the, and then it comes back within this order block to fill more orders. And then here, this is when market opened on Sunday. So it probably isn't a good idea to take trades on Sunday just because when market closes, then opens, there's a bunch of different orders. You can see it just kind of like scatters here and then it goes down, but it still stays within this order block. And then it eventually breaks structure to the upside. And another thing I should have done is instead of taking my trade where I promised to take the trade, which would have been right around here when price breaks structure out of the order block to the upside. I waited a bit. I didn't, I must have gotten distracted. And then I ended up taking the trade up here. And for the trade, another thing I did wrong is I set the take profit way too high. I don't have it written out anymore, but I drew this graph to show you how high the take profit was. It was about a 4 to 5 to 1 risk to reward ratio, which is really high, and it's just like a big risk. I thought it was going to go to the moon because we had all these confluences. Price was sort of breaking structure to the upside. It was a liquidity sweep, and I knew like if I got this trade right, like my paper trading account would go to the moon, up 5,000 USD. But and um, stop loss here. This is when my stop loss was hit. I threw in the towel and I lost 1,000 USD. So some things I would do to prevent something like this from happening in the future is first of all, I wasn't exactly sure about the confluences. Price was technically in a break of structure to the upside. It was technically bullish, but as you can see here on the weekly, it is bearish. And I bet if I went on the daily as well, I would also find that it is bearish, either bearish or consolidating tremendously. So what next time? Yeah, price is bearish on the daily. Um, but then it's looking like it's going to come back down again, is that I thought I was trading off of a break of structure, but this really was just a little retrace on the daily. And I have to keep in mind that higher time frames hold higher power. And that's why I think I lost this trade. I also lost it because I took this trade out of the discounted zone. So I was taking a premium. And if I had taken the trade, something I could have done better, even though it wouldn't have won me the trade, is if I had taken the trade within a discount, I would have started lower and I would have had to set my take profit lower in order to make the same amount of money. So I probably should have just waited instead of watching the stock go to the moon and then trying to buy it. and trying to like grab it while it's going up. It was just a bad idea. Um, it's also possible that just with a risk to reward ratio like this, I could still, in theory, I would have to win more than 20% of the trades, I believe. It would be a little bit different because when you lose 20%, you need more than 20% to get it all back. Obviously, I haven't done the exact calculations, but I would need to win less than 50%, but still a reasonable amount of trades in order to be mathematically speaking profitable. So it's possible that just trades like these just won't always work, but I can't count on just bad luck as a reason that I'm losing trades. So some things that I'm going to do next time are, first of all, I'm going to either lower my risk to reward ratio so that I can be more consistent with winning trades before I sort of get hungrier. And I know I usually have a soft stomach about trades, but this one I just thought I had every confidence. I thought I was going to do great on this trade, but the market got the best of me. So multiple take profits, either that and lower risk to reward ratio. I don't exactly know how that works. I should really figure that out if I'm going to be trading on TradingView. At least know how, like, what all the buttons do and stuff. And that's still something I need to figure out. Um, One more thing I should a fair value gap. Trying to find a fair value gap that ideal to find a fair value gap so that I know that price is retracing back into um, I could have taken the trade off of this and then I would have had extra confluence. So if I had taken the trade here, it would have been a lot better than here, where I'm pretty much just guessing. So fair value gap probably would have been better. I also really shouldn't have risked 1% on this trade if I don't have, if the daily bias is kind of consolidating. I'm either going to take a 0.5% trade or not trade at all. And especially if I don't have a fair value gap, zero point 0.5 would be my max trade. So overall, this is I thought it wasn't a terrible trade, but it was definitely one where my emotions got the best of me. I thought because there was no news and price looked like it was going to break structure to the upside. I thought I was pretty much buying Bitcoin in 2010. I thought I was going to go to the moon, but I was wrong. And so, um, from this trade is to not chase after trades. And once you miss your opportunity for a trade, there will be more, but you should never double down on trades.